everybody. Welcome to the TraderMerlin Show. It is your Thursday edition, getting near the tail end of the week. Been a great week so far. Really, again, I'm totally enjoying doing this crypto course now, and of course, I've had some really great trades this week. So I hope you guys did well out there today. Good to see you, Les, Tibor, Ken, Gary. We got Thomasina, and Thomasina, thank you for that email. I did look that one up. Big Eb and Dana, Susan. Oh, we got Tom with us today as well. Good to see you, Tom. Eric, Mario. Mario was in there as well. And Chris. Chris, I'm actually going to be up in Petaluma. I think I'll be there. I think I'm going to be there Monday and then leaving on Tuesday, so maybe I'll swing through and see you in Fairfax and just torture you down there. I'm going to bring my car in and be like, I want a complete engine overhaul and I need it done by 2 o'clock today. James Taylor, Katut, Lori V, and Leslie, good to see you guys as well on today's show. All right, hopefully my voice will make it through today's session. I did a 2-hour session this morning on crypto, which was a lot of fun. We went through a whole bunch of transactional pieces, but my voice has been crackling a little bit. Can't hang for this long talking stuff I've been doing lately. So we'll hopefully make it through today. So today's show was going to be around one of our viewers, Mike. He sent in some comments regarding trend lines and things like that. But given the comments that kind of came out the first day of the Jackson Hole Symposium, I thought, we should probably talk about that first. So we'll start with the Jackson Hole Symposium, and then we'll migrate on over into more listener questions. I've got some good ones as well. So here is the topic du jour. The Fed, the great taper. Now, I don't know. Yeah, Big Ab, I agree. Great respect and admiration to our troops out in Afghanistan. It's a horrible situation to be in. I feel really bad for those guys. Those poor troops are doing everything in their power to do what they're told. It's our government that I don't necessarily agree with. But, very sad to see what's going on out there right now. And it's frustrating, to say the least. All right, so let's talk about the Jackson Hole Symposium. It was started today. It's going to be going Thursday, Friday, and Saturday. And I put this in the Monday morning must-knows because to me it's really important to understand the significance of Jackson Hole Symposium. You have a lot of the Federal Reserve chairmen, so some of the comments today coming out from the Dallas Fed, also from Kansas City Fed, really, I think, kind of spooked the markets today. Like a lot of people kind of did, oh, well, wait a minute. Because one of them specifically gave a date where they should begin tapering. It'll surprise you. I'll talk about that here in a second. So if you have all of these central bankers, what we do is we get a little bit more clarity on what they're thinking. And I think, well, at least I know, I've been thinking that we're starting to see inflation get a little bit out of hand. That means if they continue to aggressively buy these mortgage-backed securities, these treasuries, that could continue to push this market even higher, maybe past a point that they want it to be at. So they're going to maybe start to slow that down before they start to really vault inflation even higher. So that was the topic du jour today. One of the things I found interesting was if you listen to the Kansas City Fed president, her name is Esther George, she was basically saying, they were pressing her on, like, well, when do you think that you should raise, not necessarily raise rates. What they'll do is they'll taper first. And for those that don't know what tapering is where they slow their purchases. Right now they're doing 120, I think they're doing $80 billion worth of treasuries per month, as well as $40 billion worth of mortgage-backed securities for a total of $120 billion per month in those two purchases. Now, who knows what else they're doing? That's just the main stated stuff. Tapering would imply that those purchases of $120 billion per month need to be scaled back to ultimately get them down to about zero. So Esther George was saying, I'd rather see it sooner rather than later, which is interesting because she did cite inflation. Yeah, I'll talk about the Dallas Fed, and I like the Dallas Fed. Honestly, I am in total agreement with the Dallas Fed in his comments today. But Esther says, I don't want to give times and dates, and she goes, but we're thinking about beginning this year, which is interesting. Now, remember, there's multiple things that the Fed can do to help fight inflation and slow things down if our economy gets too overheated. One of those is to raise rates, which I think will be the last piece they use. They're going to keep those rates at as low as possible, probably until next year would be my guess. They can also raise reserve requirements for banks, which I'm surprised they haven't. They've done a little bit, but not really the main reserve requirement. They're doing other things specifically for the big banks and lenders. That would be my next guess, is where they're going to start to raise the reserve requirements to rein in the loans going out. And then the action they're doing today, which is basically reducing money supply. They're not going to be buying all this, which means they're going to be pulling money out of circulation, which is probably what they should start doing. Now, again, we're at $80 billion of treasuries, $40 billion of MBSs. They were asking both of them where should they start, and they pretty much said evenly. So the Kansas City president no big deal, right? She kind of kept things vague. It was the Dallas chairman, who is Robert Kaplan. He came out and really was very much more specific, much more detailed, much more as of this date. And he basically said, my suggestion is that we start tapering as of October. Now, we still have a couple of months to October, but his stance was, look, we have to be done with tapering, because I want to be done with the spending that we're doing and buying mortgage-backed securities and treasuries and let the market support it. It's like, oh, and from that point is where you saw the market sell off a little bit today. Got a little bit of nervousness out there. Not that that's the ultimate crash for the market, but again, if we stop buying $120 billion a month in treasuries and mortgage-backed securities, we no longer control the short end or the long end of that yield curve. We're letting it float a little bit more, which starts to create some more problems. So that was, to me, a nervous thing for the market today. I actually thought that was it was good for me, because obviously you guys know I bought a bunch of puts, which I talked about on yesterday's show. Oh, and by the way, I wrote my put strikes down here so you guys can know. I have the 425 spiders and the 350 QQQs. So those are the two options I bought yesterday, which was great to have Kaplan make his comments. But to me, that's just the beginning. We have some major statements coming out tomorrow as well from Jackson Hole Symposium, and I think it'll start to paint a clearer picture. What I gathered from Kaplan and from George speaking is that there seems to be a lot of the Fed bankers who believe that they should be tapering, not necessarily raising rates right now, but tapering and getting off that spending. And if they stop doing that, to me, it looks like these markets could be headed for some more downside movement, because that money's been fueling a lot of this rally. That could start to taper off, and the market could taper off as well. And you notice I did on the graphic here, I put the great taper. I think we all agree at some point we're going to see Powell and his cronies say, hey, we got to stop taper. We got to stop spending. We will cut tapering altogether down to zero. No purchases of MBSs or treasuries. But that's a ways out. Kaplan proposed 8 months. 8 months where we reduce each month $10 billion of treasuries and $5 billion worth of mortgage-backed securities to get us down to zero. But he wants to wean off those purchases and really pointed at kind of gradually doing off of those two purchases. Now, he also pointed at the housing market, which I thought was rather interesting, basically showing some issues that he had with the housing market and how prices have gotten so elevated. He talked about things being somewhat, he didn't use the word transient, but how in some areas prices have gotten much higher, and he goes, some of that's normal. The comment that stuck with me was really about inflation for him, and he was talking about how inflation to him felt a little bit higher than normal, and some places might see much higher inflation going forward. It's like, oh, so not transient, so much higher inflation, and didn't really specify which ones, but I thought that was pretty good to see those comments, especially since I'm short. And really, I didn't short because I had any connection on Jackson Hole Symposium. I was really just looking at the QQQ chart and seeing that little spinning top doji, if you will, on yesterday's action and the day before. So hesitation. I expected there to be some profit taking. I hope it continues, because it was a good day for me. So let's show you those top 7 just to kind of put into perspective. I'll go from the bottom to the top here. Bitcoin took a little bit of a hit today. Let's go back to these daily charts here. All was doing well, and then really it started kind of an aggressive sell-off there in Bitcoin, but it's only down 3.5%. Not the end of the world. Still on a beautiful uptrend since those lows we saw in July. If it comes back down to 44, would not surprise me. That's just a nice little bounce spot there as well. I may buy some more at 44. Russell 2000 was down over 1%, 1.1 to be precise. We talked about this on yesterday's show. Or actually, I think we maybe talked about it on the Tuesday show, which was, where's the stopping point for this rally? And I said, boy, it's coming right up in this area of supply, which is the origin of a really big move down. I'm hoping some of you took the short on the Russell, because that was a beautiful move today, right after it came back into the origin of this big sell-off that started on the 12th of August. I hope some in there short. Crude oil moving on up the ladder, down 0.8% today. Really, it also coming up into that area of supply, although not quite making it to it. Turned a little bit early. I thought we'd see a little bit more of a move up in crude oil, but all in all, it was weaker today to the tune of 0.85%. Moving up, we've got the S&P 500, which is down about 0.5% as well. I don't think we're out of the woods yet. If you guys notice this price chart, if it does fall, I don't see anything on the daily that says, hey, there's a demand zone, or it's going to fall to a point and bounce back up. So this looks pretty weak to me. If I break this down maybe into, let's say, an hourly and look back, now you can see a spot where the S&P has got a better chance of turning. And I'll put a little line on my chart for that one just so we can keep an eye on that one. And that's going to be right around that 44.50 mark, right? 44.50 seems to be a pretty logical point for it to at least stall. If there is good momentum and if comments come out even more, let's just say pessimistic about the markets going forward, about inflation, about GDP, etc., then I think that 44.50 line gets broken. And after that, you're looking right around 43.80, right? That's a pretty nice drop. I certainly would be loving that given my position in the S&P and NASDAQ short. So last two. Well, actually, I don't usually talk about the Dow, but we'll do it anyway. Here's the NASDAQ. NASDAQ also rolling over. Some might be asking, where is its next target point? For me, it's about 15,125. Would be right around where I think that this thing's going to head to, which is great because that's 150 points off of where we are right now. Beautiful. We were down 77 points today, so that's about another, another 1% down to get to 15,127. Cool. Take it. But right now, just slowly drifting down. It wasn't really that awful of a day. Just started ending weaker, and I think that has to do with the sentiment that the two Fed members, Kaplan and George, kind of stirred the pot today. We'll see if we get more of that over the next couple of days. Dow was your best performer of the major indexes, but it's funny because it doesn't look like it was the best performer. Really kind of an ugly-looking picture, but still only down 0.47. And best performer, gold, back up 0.18% to 1794. It sounded like whiskey? Did I have whiskey? I'm not drinking today. I will be having a fresh batch of whiskey. One of the viewers, apparently from Singapore, sent me a bottle of whiskey to the office, so I'll have a nice fresh bottle for tomorrow. It'll be fun. And let's see. Should I make a public announcement? Given the fact that I'm going to be traveling next week, I'll be in Northern California, visiting people, visiting family, visiting friends, and going to concerts. I'm not going to do shows next week. Sorry. I know. I will be doing my Crypto Investor Live program, though. We'll be doing that Tuesday morning from 9 to 11 and Friday 9 to 11. I will probably do a Friday show because I'll be back in time for that one, guys. But sorry, Monday through Thursday, I got nothing scheduled for you just because got to go travel, got to go have some fun. My concerts in Lake Tahoe were canceled, but loving my band because not only did they cancel the show in Lake Tahoe, but they decided, well, instead of doing Lake Tahoe, we're going to go and do shows in Mountain View, California. So I'll be in Northern California for that one in Mountain View, Shoreline Amphitheater. Is Tilly done, I guess? I had Tilly on kind of once a month, and she's been so busy. She's studying to get some licenses, which has taken some time. And John, well, just leave this chat window open. It'll be fun. Sorry, guys. I know. I'm sorry. I feel guilty, too. Oh, yeah. Well, it'll be fun. I'm definitely going to have a great time. Who knows? I might even surprise you with a live stream from the Fish concert. No, I probably won't do that. Given the company that's at the Fish concert, we probably won't do that. All right. Where are we at now? So, I don't know what your thoughts are on the Fed and tapering. I know that we usually have Brendan in here, and he's very into he doesn't believe they'll do any interest rate raises for years. And I'm like, well, I think you'll see them raise rates next year. I think 2022 will be the year that I see them raise rates. If you're looking at the tapering, yes, I hate to say it, I think what the Fed is doing is right. I think they should start tapering sooner rather than later. Let this market get back to some slight semblance of sustaining itself as opposed to constantly being pumped this financial drug, which is U.S. dollars and stimulus from the central bankers. So I think it's actually a really good one. Well, we'll get you back your fix in no time. Jay Southwest Joe. You going to come up and join me at the Fish concert? Good luck. That might be sold out by now. What about the national debt? And Biden administration wants to print another $5 trillion package. Our government is a joke. Our government is totally a joke. I agree. Let's be clear, though. It's not just Biden. This is not a Biden thing. This is not Democrats or Republicans. Trump was doing the same thing. It's every president wants to pump as much money into the economy because it makes them look better and their administration looks better. So this is not a Biden thing. Biden just is trying to push it through, but the Republicans want it as well. They just want that money to go different places. So it'll always be this battle between Democrats and Republicans because unfortunately we have a two-party system in the United States, which is absolutely awful. Not a fan of a two-party system, but it is what it is. Bottom line is we will get some stimulus. I agree. It's difficult to say don't do the stimulus, right? Because I think that if we look at where money is going to be spent, I'd much rather be spent on America. I'd much rather see it spent on infrastructure and building our roads and making America. I hate to use the slogan that Trump was using, what making a country great, right? There's a lot of issues we have. Being the police officers or police force for the entire world, to me, seems kind of silly. The amount of money we spend on defense, it far exceeds anybody out there. We could probably spend a little less and still be incredibly secure, but we've got to defend our borders and be a safe country. But anyway, I'm not going to make this a political show. You're driving Northern California, think you can log on and do a show? Maybe I could do one as I'm driving. So the problem is I don't have access to charts, and part of the fun for me on this is bringing up different charts and showing you all the good stuff. So anyway, we'll do my best. Who knows? I might surprise you. We'll see what happens. All right, let me go to... I didn't change the font on this one. Sorry. Normally I put in the big bold font, so I'm going to do it because I'm a professional and I can't let you guys see this unprofessional work that's staring me in the face right now. Where is that chart? So I will now go to Mike's comment and question. So I paraphrased this one down. He had a lot of comments and feedback regarding trend lines and such. So here you go. Here's Mike's comment. He says, I'm wondering if these trend lines are forecasting a possible top or topping of the market. I took the monthly view and added long-term trend lines or channel lines back to March 2020 tops. And I used the bottoms of the monthly wicks. We get so involved with day-to-day, we may not see the bigger view, which it may forecast tops regardless of news or economic events. And I agree. I think that there's a lot of information we can glean from the longer term charts. It's just challenging when we look at the charts as is. So for example, I attached Mike's charts here, and you can see here's his monthly chart of the SPY, and you'll notice he's gone through and connected these bottoms. Technically, this is not a trend line. Just so you know, a trend line by definition has to have 2 points touching and a third point confirmation. That's going straight CMT textbook. So right now I look at SPY, I wouldn't call this a trend line. However, I'm going to side with you on this one, Mike. I think that that's where I would put it. If not, I might have put it between this low right here. Either way, the general direction is up. Now, here's where I have more of an issue is with this longer term one, right? Most people tell you don't put trend lines across the top unless it's in a downtrend. If you're in an uptrend, you put trend lines across the lows. If you're in a downtrend, you put trend lines across the top. That's just basic trend line 101. So I look at this top line you have here, and I'm like, well, where's the origin of this one, right? Where did it start? So I'm not sure fully on this one as being a trend line. I'll show you how I do it here in just a second. Similar picture here. You've got the S&P, and of course, the main reason you have such a big discrepancy between the two is this is a futures contract, the ES, so you have some rollover differences, and that's why people use adjusted versus unadjusted charts for futures, so they get a little bit better picture. So still, you're looking at this one as not up to your upward trend line and maybe having some room to go. I'll show you a totally different picture in a second. Here's your Dow Jones Industrial Average. So, if I look at this line here, where do you draw this line from? I'm not exactly sure. Did you pick from this low to this low, which again is only 2 points of contact? But, all in all, I think, yes, the picture shows you a nice uptrend. Same thing here. What are we connecting this top line to, right? To get it to, where's your anchor point? So I'll show you an example of that over here. So let me go out and just do, you got the NQ. So here's the NQ, and we'll go out to a monthly. All right, so in your picture, you go through these highs of 2020, which is way back here, right? So my question is, how do you even draw a trend line off this? On the top, you really wouldn't be drawing anything off the top, right? It's not like you can go, oh, I'm going to use the wick, and then what do I connect this to? There's no trend line. I mean, it's just, it doesn't work that way. Now, the bottom one, I would argue that if you go back to the lows we saw in 2009, you could draw some trend lines, and probably right about in here is where I would draw that trend line. That trend line in itself basically has me looking at this going, something's wrong. Right? Just look at the acceleration away from that trend line. And you really don't need to put trend lines on here, do you? I think we could all look at this chart and go, what in the hell is going on? This is way out of normal, right? Something is clearly just off the charts with this, literally off the chart. I mean, you guys all remember the analogy I do with the rubber band. For those of you who are new, grab a rubber band, put it around your wrist, and you pull that rubber band a centimeter away and let go, it's not going to hurt. If you pull that trend line an inch away, and let it go, not really going to do much. You pull it 3 inches away, you're going to get a little sting. What's it looking at right now, what it looks like right now on this NASDAQ, like if that red line, the trend line there is your wrist, that rubber band's like 8 feet away from your wrist. And basically when it gets let go, it's going to take your arm off. I mean, that's how extremely we've extended above that trend line. So Is it a channel line off of the lows? Yes, I think that that's what was done. So let me show you a tool that I'll use occasionally, and it's called a regression channel. And really, all this does, it does a very similar thing. It just says where are we within this, right? So if I map out this whole trend from here to here, it'll give me a trend box, a kind of a channel to follow for that, right? And it does tell you the same picture, right? It says, hey, you know what? We are way off. We're way outside that upper part of the channel. Now, we could add on other indicators here. You know, we could use RSI. We could use stochastics. You could use Bollinger Bands. All of them are going to tell you what? That this thing's pretty extended. Do I have any? I think if I have any in here. No, I don't have any indicators built in right now, but let me just throw in one. Why not, right? Just have some fun. Do you guys have a favorite? You want me to look at Bollingers, stochastics, RSI, MACD? I mean, you throw out an indicator. I'll throw it on the chart here just for fun. But I'll do Bollinger Bands just because it's easy. So there's Bollinger Bands added on. And it's not outside the upper Bollinger Band just simply because the trend has been so strong for so long. As FX Green says, what about moving average? Perfect, right? Notice let me take off the regression channel. The middle part of this, of Bollinger Bands, is a 20 period, right? So here you can see the 20 period moving average. Notice how much it's moved away. And it's not slowing down. It's actually, it feels like it's accelerating away from this moving average. This tells me that people are just buying anything for any reason, and it's pouring in right now. That's part of the reason that I thought, all right, I'll buy November puts on the S&P and the NASDAQ just because it seems like reckless abandon right now, where it's just caution to the wind. I got to get on board this market. I got to buy something and let it run. And to me, that's what it feels like is happening right now in the NASDAQ, S&P, not necessarily the Russell. Russell's just channeling sideways. But to go back to the trend discussion, you know, I definitely don't believe that you should be putting trend lines way far back. I do like channels. I think channels are a great piece. So let's look at the S&P. Similar picture, right? We could do that same regression channel from that low of 2009 to the peak we're at right now. And you can see clearly overextended. Well, what if I modified that and said I want this to be off of the most recent lows since that 2020 rip up? All right, let's get rid of that. I'll do the same thing from these 2020 lows. And there's your channel. So off the 2020 lows, we're still trending strong. No big deal. Because we really, this channel hasn't incorporated in any big pullbacks or sell-offs. So I'm not trying to discount the validity, if you will, Mike, of those trends or topping. I think what's more evident is if we just step back and use, you know, those traditional overbought, oversold indicators, like James Taylor says, Bollinger Bands. Okay, you know, we had Bollinger Bands on here. Bollinger Bands have been extremely, it's been stuck to that upper Bollinger Band for the better part of, oh, this is a monthly, 1, 2, 3, 4, 5, 6, 7 months out of the last 10, it's been outside the upper Bollinger Band. So it actually feels like it might be slowing technically a little bit because the moves are not as large. But you know, I think it's just a clear indication that things are getting way too heated up. You know, those that know Bollinger Bands know that there's usually this compression where price squeezes and then it explodes. And that's what we're in right now, is that explosion phase, just like we saw back here. Right? You guys can see you had the squeeze and then you had the big explosion where we had a big market move, and then what did it do? It consolidated down a little bit. Actually, didn't really consolidate much, did it? It had a slight consolidation and continued to rip up. So I personally would not be using trend lines in here because it makes it too challenging. Plus, look at the angle. That angle of this market right now is just ridiculous. It's way too sharp. Markets don't run at this type of angle for a long period of time, right? Obviously, it's running in this angle right now, but it should not maintain this for an extended period of time. Let's look at the numbers here, and I'm actually off on my dots here. I mean, from those 2009 lows, 2020 lows, the S&P is up 106%. Right, that's pretty crazy. Exactly, Jordan. Love it. Jordan, when are you going to come on and be my guest? Jordan needs to come on the show and be a guest. He doesn't like to come on the show. He's a little shy. But yes, stability leads to instability. And vice versa, right? Just like John O'Donnell says, a high price is fixed by what? A high price. The higher price goes, the more likely people go, you know what, I'm not going to buy it. At a certain point, that should happen in our equity markets and our housing markets, but it hasn't happened. So we get these ebbs and flows. Right now, we're getting Alan Greenspan's irrational exuberance, in my opinion. We're getting just crazy buying. At some time, at some point, you'll see this pull back, go back down into a downtrend, and get back towards some normal levels, which would be what? Where would we deem to be a normal level? Well, let's put on the most generic measurement of normality, 200 period moving average. And this is a monthly. So the 200 period monthly moving average would bring us all the way back down to almost 2,000 on the S&P. I'm sure a lot of you would crap your pants if the S&P dropped all the way down to 2,000. I can tell you what, if the S&P drops to 2,000, you're going to see me one of the happiest people on the face of the planet because I will be short. Yes, Jordan, I'll reach out to you. We'll get you on the program. He's got some good insights in the market. He likes to talk. He's very process-based, which a lot of you guys are as well. So I think it's good. And some of you may have seen him in the XLTs. He's in one of the staples of our XLT program. So anyway, Mike, I don't know if you're on with us. I think I did see you. There you are. Does that help at all? I think your dad did the right thing. He talked about his dad showing this many, many moons ago, and I think you're right. I think what's important with it is if you're using those trend lines and they have utility for you, and they're giving you that insight that, okay, these markets might be topping, might be overheated. I think more importantly now is what is your plan for that, right? What are your action steps that you're going to do to say, okay, these indicators that I have looked at in the past have some validity to me, and I feel like they're going to indicate a sell-off. All right, now I have to put my plan in place and have my stops in, of course, just in case I'm wrong. But I can never say anything about anybody's analysis as long as you're making money, right? Even if I think it's the dumbest thing on the planet, if you're making money with it, who cares, right? I read once this guy literally got a $50 million, not a hedge fund, it was a hedge fund, $50 million hedge fund because he was very accurate, believe it or not, with the migration patterns of elephants. And I was like, what? How the hell does a migration pattern of elephants have anything to do with trading? He was making money and he was real good at it. So who cares, right? Cool. Let's see. Eric says puts, right? That's one option, right? Certainly I think the first step would be to analyze current positions that we have. So if you're long on the equity indexes or things that are historically long bias in bull markets, then start to put some stop losses in place and say, all right, if I am right, which I could be wrong, but if I am right and this market does sell off, where am I going to get out? Where am I going to put the brakes on it and bail on these positions which I might be in? If you already are out, maybe you do start looking at puts. Because right now, as this market hit, yesterday was a great example. The options were pretty cheap yesterday. We only had today's move. Today's move was down 0.5%, 0.5% of the S&P. Yet my gains on my options today, and I bought them yesterday, 14%. So you had a 14% gain in one day off a 0.5% move. Why? Because yesterday those options were really cheap. Market was all-time highs, looked really strong. No one wanted protection. It's going to keep going, right? Fed. So all of a sudden, I bought a bunch of options, bought a bunch of put options when they were cheap, and now when this market sold off, just 0.5%, right? It wasn't like a big drop today, but 0.5% all of a sudden gave people the jitters, and the premium spikes on those things. It ended up being a great day. So now might not be the best day to be buying puts. They always say, what is it? When there's blood in the streets, that's when you want to be buying, and the opposite as well, right? When everyone's getting overly euphoric, you got to back away. I think everyone's getting overly euphoric on these equity markets. But good one, Mark. Migration of elephants shows you where to leave your trunks. But good one. All right, let's see. What are your thoughts on potential secular bull trends that led up to the 80s, 90s? If you zoom out on logarithmic scale of overall markets, it looks like it goes through 10, 20-year periods. My mentors always were telling me that the markets that there's this pattern between 6 and 10 years that markets rally, and I kind of believed that for a little while, but I don't anymore. My belief is that markets rally as long as they need to until the herd mentality or sentiment changes. And that could be 3 years, could be 10 years, could be 20 years, could be 50 years, who knows. I don't know how to change this real quick to get into logarithmic scale, except maybe click that button there, which now puts it in logarithmic scale. I think I just did it. I don't know if that did. I don't know if that's, oops, sorry, you guys can't see it. I don't know if this is helping out. Yeah, this is putting it in a logarithmic scale, but it really doesn't change the picture too much. It still looks way overbought, regardless of how I'm changing that chart. So, unfortunately, Alan, that's I look at charts normal. I don't look at them in in logarithmic. It's one of my flaws, I guess. Go to auto. Great, now I think I'm totally screwed up my charts. There you go. Look at SPX back in the 40s. Okay, go SPX. Got to go monthly way back on that one. And it's not gonna let me get that. We really have to tweak these charts to get that. I would love to have bought the S&P back in the 40s at $20. I don't know, Alan. I'm on the monthly, but I don't know if I'm getting the same data as you. It doesn't look good to me. And honestly, I think going back that far is a little too much for me. I think the world is a different place since it was back in that time period. But I think we'd all agree that things have been pretty overextended. So, we'll see how it all pans out. I personally think we're going to see some sell-off here, but I've said that for a while. You guys notice there's a line on your screen up here that I have at the very top, which was Scott McCormick's price target, and that was 46.05. It was his price target for the S&P, and we'll see if we get there. We got a little ways to go. We're at 44.70. He was on a couple weeks ago, but who knows? Might actually hit that one. Yeah, I had it on logarithmic, but it really didn't change the picture too much for me. Alan says, instead of QQQ or IWM puts, what do you think instead about buying puts on individual stocks showing relative weakness? Yeah, I think that's, if you have the time to do the analysis, it's a great point. Yes, I think you're right. If you have the time to do the analysis on individual securities and break apart that sector and say, and maybe not even that they just right now have relative weakness, but maybe which ones have enjoyed too much of a bull run. There's a lot of different reasons. Certainly individual stocks will move more. I like the liquidity of indexes, plus if I'm wrong, I don't want to get caught on something that jumps up 50% either, right? Obviously, I believe I'm right, which is why I make these trades, long or short, but I don't want to get caught in, one of these biotechs that jumps 50% or something that's I just have a hard time with single stocks unless I'm actively trading those. I don't really trade individual stocks that often anymore, unless I'm day trading or short term. But it's a good point. If you felt like, pick something that's got relative weakness overall compared to the market. You've seen some sectors. Let me bring up some charts here. If we look at, there's your S&P. If we take a look at like XLE, all right, XLE has been relatively weak and looking weak. Weaker over the past couple of months. Well, I'll go out here and I'll turn on to the daily. All right, we're looking rather, I don't know why my charts are not auto-adjusting. There we go. There's auto-adjust. This one looks weak, so does that mean that energy is going to get some more downside movement? I believe it is. I believe energy is headed for more south side. You guys can see the demand zone I've got drawn on there. But I would agree with you, Alan. If you felt like this market was rolling over, and I have some specific opinions on energy, as you guys know, well, then why don't I just start going short energy stocks or specific ones, right? As FX Green says, what about S&P 500 sectors? Yes, absolutely. So maybe I could just go short XLE. And I think this is the beauty of it, right? FX Green is, I'm playing it safe and maybe not going to get as high a percentage rate return because I'm going overall market. But I could whittle that down and I could say, you know what? I think energy is going to take a dump, right? I've been bearish on energy for a while. I think it's going to keep going down because of inventory, supply increases in the Middle East and OPEC, as well as demand going to be dropping here, especially coming out of summer and maybe even another lockdown. Who knows what's going on in California and other states. But yeah, I could specifically target XLE. Or if I was like Alan, I could rip apart XLE and say, hey, is it Chevron? Is it Exxon? Is it ConocoPhillips? Is it Phillips 66? Which one do I want to go short within that? So I think all of it just speaks to your individual preference. Your rates of return will probably be higher on an individual stock, but your risk is also higher, right? Just because that one individual security could move up a lot and you have individual stock risk. Alan G says, technology, consumer discretionary, or any of the risk-on sectors seem like good candidates. I agree. Technology, I think, I know we have, I think Tom and Big Ev are on here. You have FNGU and FNGD, right? Those are potentials as well. FNGU. I personally would be very careful with these ones. These things are dangerous as hell. This is a triple FANG stocks. This is the triple FANG stocks long. And I think FNGU, this FNGD is the inverse. Oh, come on, man. FNGD. Oh, guys, sorry. I had my keyboard set up on the my switching software. You'll like that one. I just called myself the donkey of the day. FNGD. Right, so here is the triple fang. Triple fang short, $2.51. Talk about getting murdered. I mean, that thing is just tanked. You know, but someday, does this one get its comeuppance? Does this one all of a sudden rally and all of a sudden we get a nice giant move up? Could be, right? If the fang stocks really start to implode, which I don't see them imploding. I could definitely see them selling off, but not imploding. I mean, come on, do you really think we're going to move away from Apple and Facebook and Microsoft and Google and Amazon? I don't think so. But maybe they're slowing down a little bit. Big Ab momentum. Wait, didn't you leave Big Ab? I thought you were taking off. Momentum is fading historically. When participating in a rally wanes, so does the rally. Yep, fun fact. I just sold my last FNGU last week. 17 months in it, Tom? Hey. I wish, instead of having a donkey of the day, I should have like a, what's the opposite of a donkey of the day? Like the king of the day, the pimp of the day? I'll make a new graphic for someone who had just like an epic run. What do you guys think? Is it the king? Is it the pimp? Is it the Mac Daddy? What do you call it when someone has just like the epic, closes out a trade and you should all just go like this, just bow down and be like, yes, we're not worthy. We need to make a new graphic for that one because I do have the donkey of the day, but obviously Tom's trade would not put him in the donkey of the day. The lion, no, lion's good. Oh, I guess the lion. The lion of the day. All right, the lion. I'll see if I can get a graphic put to get the soaring eagle of the day. Ooh, I like that. The eagle of the day, and I can have that little eagle squawk in the background. I like it. All right, I'm writing these down. You think I'm joking? The trade baller. The baller of the day. Just have like some Allen Iverson pose. All right, let's see. Lion, eagle. All right, I'll see. I have 2 votes for lion, so it might be the lion of the day. Do double G. D-O-double-G. Oh, there you go. I like the goat. Eagle that sounds like a chicken. Well, not a good chicken guy. Gong, Seahawk. No, Seahawks because I hate the Seattle Seahawks. Can't do it. The wolf. Could the queen. There you go. So we'll keep it as an animal that's asexual. We don't want to be specific. Correct, Tomasina. Because one day Tomasina's going to chime in and be like, hey, I just bought one put on the S&P 500 and it's up 6,000% in 3 months. I'm hoping. Come on, Tomasina. Nail it. All right. What else do I have here? I like the eagle too. I think the eagle of the day because you're just soaring. That's a good one. This is an interesting question. What time we got? How long am I going here? Oh my goodness, it's already late. I'm going to read this one real quick and offer my quick 2 cents on it just because I think it is important. And there's also some misinformation in here that I want to make sure we clarify. So this one's from Manuel. Manuel, thank you for the comment. Oh, you're a Detroit Lions fan, Tom? Oh, I held you in such high regard, and then you just talk about a fall from grace. A Lions fan? Come on. The goat? All right, so it's going to be a goat. But the picture of a goat just never really looks that good. But we'll do goat or an eagle. I'll see what I can do with one of those two. See if I can get a graphic created for that one. The gorilla. People of soul. I love it. The gorilla. Okay, so here's Manuel's question. Let's say that wheat's current price, and basically he's asking me about options, right? It says, let's say that wheat's current price is $50 and you sell a put option contract at 40. If price ends up at 38 when expired, would you lose more than the capital invested? Okay, so stop right there. Basically, in that situation, if it's trading at 50 and you sold the 40 puts and it's now at 38, you would be long, you'd be exercised at $40. If it's now at 38, you're technically only losing $2 per share or per contract or whatever it is, whatever increment you're using. We'll say it's per share even though it's wheat. So you'd be down $2. So you sold the 40 put, it's now at 38, you're down 2. Remember, you also collected premium. So let's say you collected $1 worth of premium. So now you're technically only down 1 because your dollar cost average would have been not 40 where the exercise was, it's at 39, which is your exercise price taking out your premium. So now you're only down $1. So it's you wouldn't be losing more than your capital, especially if it's cash secured. Now the second part of your question, or do you end up owing the broker something extra? No, you don't, unless you would get margin, but it'd have to fall dramatically. And here's where I want to get the clarity. Manuel, you said I saw this kid die from doing that. He was well all over the news. His position was at negative 700,000. That's when I just decided to go with what I know, buy calls and my puts. Okay. The reason that this kid died, and it was a tragedy, it's absolutely horrible that this happened, is there was a data issue. he had a data issue, and for some reason Robinhood showed him, it's this weird way that options were calculated. He didn't lose $700,000. He did not lose that money, but it showed up on his screen that he was negative $700,000 because of the way the options were settling. So this kid didn't know what he was doing and unfortunately saw it, and he took his own life because he thought he lost $700,000. He didn't lose $700,000. I mean, this poor kid took his life over something so stupid. Now, could you be forced to send in more money? Yeah. In theory, yes. Right? So let's go back to the initial example here. It's at $50 and you want to sell the 40 puts. You think, okay, I'm happy buying it if it drops 20%. From 50 down to 40, I'm happy owning it at 40. Great. Awesome. If the premium was good enough, then you make that trade. What's the worst that could happen to you? The worst is the security literally goes to zero by the time you're exercised. What are the odds of that happening? I'm going to say zero, right? A $50 security going to zero in a month or by the time your option expire, I'm going to say that the odds of that are zero. So what could happen is, let's say it drops by 50% and you bought one contract. Well, you'd be on the hook for $4,000. You need to come up with $4,000 to buy it. But now it's only worth $25,000. So you're down 15, is it 100 shares? 1, 2, 0. Yeah, you have to come up with $1,500. That's it. So the most that you could lose on this, the most that you could lose would be $4,000. That's the absolute maximum you could lose in that trade. You wouldn't have to send in another $700,000 to the bank. So I want to clarify that one. My main question was regarding how far into expiration should someone with a swing trading mentality go in the options market. If 100% return was achieved, it's a week away from expiration and price action seems to keep going in the trader's direction. Depends on if you're buying or selling. Okay, the easy answer is this. Are you a buyer or are you a seller? Since I'm a seller normally, and that monthly account I told you about and did a show on TraderMerlin, if I'm a seller of options, I want 30 days or less. I don't want to be selling a lot of time. The more time, the more risk to me that those options will be exercised. All right, so I want to sell and I want those things to expire worthless. If you're a buyer, you need time to let price move. And there's this a curve where you can watch the value of your options decline dramatically as it gets closer to expiration. So personally, I don't believe if you're buying options, you probably shouldn't hold them any closer than 30 days to expiration. So like these ones I just bought, I'm looking at 120 days. With less time, you're exposing yourself to more gamblers. Correct. I'm making sure that these have enough window of time for this market to fall. Now, I'm not thinking that the market's going to go down 50%, but if it drops 10%, these options are going to go up huge in value, and I'll exit them way before expiration. I have no interest in holding these options to expiration. I want to capitalize on what I'm expecting potentially to be a black swan event coming up here in the next couple of months. Just a gut feeling, which I talked about yesterday on the program. So, Manuel, that's it. If you're in an options trade and you hit 100% and it still feels like it's dropping, moving in your favor, great. But remember, every day that you get closer to expiration, the time decay gets faster. You're losing more value in those options. So what could you do? Close out that option and buy another one that's 90 days out, so you don't have that huge decay in time decay. All right. Boy, my mouth is dry as heck. All right, let's see what we got cooking for today. Here is your economic announcements for today, and then I'll talk about tomorrow. Today was interesting. The GDP numbers came out pretty decent and missed expectations, but not by much. 6.6 is what we got. They expected 6.7. We were 6.5. So we still went up on GDP, just not as much as thought. The GDP price index was of concern because now we're seeing prices rise a little bit, confirming inflation. Of course, you have the Jackson Hole Symposium. What else do we have? Earnings-wise, I thought this was interesting. Look at all these beats. Every single company on this earnings page beat earnings. Every one of them. Abercrombie & Fitch, Hello Group, Marvell Technologies, Workday, Dollar General, Dollar Tree, Burlington, Delta, all beat earnings. All of them. And if you look at them, all of them except one was down, and down big today. Workday was up 5.6%. Everything else was down. Abercrombie & Fitch dropped 10%. Dollar Tree down 12%. Burlington down 9%. And that's coming on the heels of some pretty good earnings, retail sales earnings over the past week. So this is basically, as that market sells off, these are all getting hit. And that's what happened today. For tomorrow, Only retail stock I see out there is Big Lots coming out with earnings tomorrow. We do have some economic data, of course. You can see quite a bit here from the U.S. You have goods trades balance, personal income and spending, wholesale inventories. Tomorrow, you're going to have Powell speaking, and of course, all day long, Jackson Hole Symposium. To me, that's the big wild card out there, so be very careful. I'm expecting some more weakness tomorrow, as I believe the talk track is going to now focus more about when to taper, not if, but when, and is it going to be the end of this year? I believe you'll start to see the Fed taper sooner rather than later. I think they're actually going to start, maybe even before October, start tapering slightly, right? Let's just maybe pause our purchases a little bit, but they'll slowly taper off. I think you'll start seeing that, October. October-ish sounds about right to me, but the talk track I think is going to start to spin up around tapering, interest rates, and inflation. That trio is going to create some uncertainty in the market, in my opinion. But hey, play it as you see it. All right, guys, that's going to do it for me for today. Tomorrow, I will be pounding some great Japanese whiskey tomorrow. I hope the bottle arrived at the office unless somebody stole it from me, which of course could happen over there. But anyway, I hope you guys enjoyed today's show. For those of you that are going to be at the Elevate session tomorrow, I will probably see you then. Basically just going over a kind of a high-level overview of the crypto program for those of you who are in the Online Trading Academy community, because we're not opening it to the public yet. It's specifically for Online Trading Academy graduates at this point, but we're doing the third of 3 Elevate sessions. We did one last Saturday, one on Monday, and I'll do one tomorrow morning at 8 a.m. That said, have a great evening, everybody. I will see you on tomorrow's show. If you have any comments, questions, feedback, suggestions for shows, questions, anything, send it on in at TraderMerlin@gmail.com. You can always click that subscribe button. You can click the thumbs up button, whatever you like. Yep. Yeah. You know me, big guy. I'm not one to pound shots, but who knows? I'm a little too old for that, but you never know. It's been a great week. If we get a 1% down day, I'll take a shot tomorrow. All right, everybody. Thank you so much. Hope you enjoyed it. Have a fantastic evening. I'll see you manana. Take care.